Gold finished the week near its high after one of its strongest 5-session advances of the past 2 years. But the momentum gauge did not finish near its own high. Price stayed elevated while 2 versions of RSI cooled sharply. That is the anomaly. Is momentum failing, or is a powerful move simply pausing without giving back much price? The answer is not hidden in one overbought label. It is in the relationship between price, momentum, and participation. Start with completed bars. From Monday's first hourly bar near $4,120 to Friday's close near $4,401, gold rose about 6.8%. The weekly high was near $4,432, and the low was near $4,074. On a close-to-close basis across 5 sessions, the gain was about 8.7%. Against 2 years of rolling 5-session moves, only about 2% were larger in absolute size. This was not an ordinary drift higher. The path matters too. Monday finished slightly lower. Tuesday added roughly 1.9%. Wednesday produced the largest daily advance, about 3.3%. Thursday paused. Friday then pushed to a new weekly high before closing about $31 below it. Now compare that price path with RSI. The simple average, or Cutler, version reached about 89 during the week, then finished near 66. Wilder's smoothed version peaked near 84 and finished near 64. Both formulas agree on the important part. Momentum became exceptionally strong, then cooled into the mid-60s while price remained close to the weekly high. They disagree about the depth of the early reset. Cutler RSI briefly fell near 27. Wilder RSI bottomed closer to 37. That difference is why a single threshold should not decide the story. The durable observation is not that RSI left overbought territory. It is that price preserved most of the advance while both momentum measures stepped down from their peaks. There are 2 competing interpretations. The first is momentum exhaustion. A market can make a marginal new price high while each fresh push produces less acceleration. If that pattern continues, the rally becomes increasingly dependent on buyers accepting high prices without stronger momentum confirmation. The second is constructive digestion. After a fast move, RSI can cool because the market moves sideways rather than because price collapses. In that case, the oscillator resets while the breakout structure remains intact. 1 week cannot choose between them. But the chart gives us clean tests. First, watch the Wednesday to Friday breakout area around 4,320. Holding above that region while RSI stabilizes would support the digestion interpretation. Repeated closes back below it would show that the momentum cooldown is reaching price. Second, compare the 2 RSI formulas. A renewed price high with both versions rising would restore confirmation. A new high with both versions making lower peaks would strengthen the exhaustion case. One formula alone is weaker evidence. Third, check participation. Silver rose about 9.2% from Monday's first hourly bar to Friday's close. That cross-metal strength says the move was broader than gold alone. If silver keeps confirming, participation remains wide. If gold stands alone, the move becomes more concentrated. This is why overbought does not mean a market must fall. It means recent gains were unusually concentrated in time. What happens after the concentration is the useful evidence. Gold ended close to its high. RSI ended well below its peak. Those facts can coexist in both a healthy pause and an early loss of momentum. The experiment is to observe which variable moves next, price back toward the breakout region, or momentum back toward its high. Subscribe for future weekend lab experiments. Daily observations are posted at Market Validation Lab on X. The link is in the description.